Welcome back to another episode of Marketing Management and Money. I'm your host, Ryan Owens.
I'm your host, Ryan Murray.
Thanks for joining us again today. We are super excited to have you back. Today, boys and girls, we are going to teach you a lesson that your parents probably don't think you've learned yet, and that's cleaning your room.
Oh, geez. So is this marketing, management, money, and tidiness? Is that
organization? Marie Kondo is endorsing. I'm just kidding. No, she's not.
All right, so you're going to make everyone clean their room.
I think a third of our listeners just checked out.
Probably. But for the 2/3 that stuck with us, it's going to be a great episode.
Right.
I think. What are you actually covering today?
It's going to be great. It's going to be awesome. We are actually going to talk about, in fact, this is a story that you introduced me to. So
blame it on me.
For sure. Always. Every time. Right?
Right.
So we're going to be talking about how to make sure that your financials, your accounting is set up correctly. And so you avoid a lot of the pitfalls and confusion and frustration and hair ripping out that comes along with trying to manage your finances in a small business.
So I see where you're going now. Honestly, when you were first talking, I was thinking to myself, I'm like, is this going to be like a management leadership? Like, because there is a thing, and I know this isn't what you wanted to talk about, but sure. I'm going to just deviate. You're going to get a bonus on this episode because we're going to cover this little, nugget of information on the management side. But there is a thing of whatever your workspace looks like is going to directly influence your productivity or how you work.
Sure.
And so that doesn't always mean clean. However, keeping it clean and organized is going to improve performance. That's where I thought you were going with this.
No. We're not going to be that feng shui.
Oh, okay.
Maybe another time we can go into talking about concepts of Pomodori and organizing your time and organizing your space, two different aspects, but
you got to slow down because I'm still trying to Google Pomodori and I don't know how to spell it here.
It's a fun one. Yeah. We'll definitely cover time management, I'm sure, at some point. However,
today we're talking finance today.
So I'm going to let you tell the story. I think I could probably, but I'd slaughter it. So
this is one of my favorites. So when I'm working with people and trying to help them to understand their finances, and this is really good for people who want to understand kind of the back end of the finance. Look, before I jump into the analogy, can I give a little bit of background? Is
absolutely,
that okay?
For sure.
Okay. So most people doing their finances are going to be using some form of software.
Right.
And I'll tell you, QuickBooks is the most popular software out there. It doesn't mean that that's the way that you need to go. A lot of people are using alternatives like a Wave Apps or a Peachtree or,
I've heard a lot of people use Peachtree.
It used to be more popular. QuickBooks is kind of, eaten out quite a bit of that market share. But there was a point where Peachtree was quite popular. It still is a viable option, and by all means, if you're using Peachtree, keep using it. But QuickBooks is the biggest. It's not the one that I use, depending on what you're doing.
I use Microsoft Word.
And that wraps it up for today.
That's why I told you beforehand this was a mistake letting me pick the finance topic for the day.
Yeah. So don't use Microsoft Word.
Oh gosh, could you even imagine? That would be miserable.
I can't imagine because I've seen it.
Oh my gosh, are you kidding me?
No, I kid you. Okay, so
here I was making a joke.
I know, and it's
Diversion. Let's go.
I've seen so many variations of how people keep their financial records. And this is an interesting thing. The most accurate records that I've ever seen are consistently the old school ledger. The guys who are just, keeping it in a little book.
Yeah, I was going to say,
Like,
Flipping through pages to go back.
I mean, I had this guy that I was working with once. He was a beekeeper.
Okay.
And it was kind of fun helping him to go a little bit more commercial with with selling his honey. And then also there's a big thing, I didn't realize this, but you can rent your bees to the almond fields in California. And so you'll get a lot of you'll get a lot of people who will they'll raise the honey, and then in the off season they'll rent their hives out to basically pollinate the almond fields in California. Kind of an interesting little business model, right?
That's amazing.
Yeah, and which goes to show that if you are doing entrepreneurship, I mean, get creative. Think how else can you're doing more than just selling honey. You've got to look and be like, oh well, I'm gonna hire out my bees. They're now my employees.
Yeah.
So kind of interesting, but nonetheless. So I'm working with this guy, this beekeeper, and I started asking him some questions, and he pulls out this little book out of his pocket.
Okay.
And it's just a little notebook. And I look at that and I'm just like, so is that how you keep track of your finances? And he's like, yeah. And at first I'm thinking, I'm like, oh, boy, this is going to be a mess because, it's just this little notebook that's in his pocket.
It's like you took lessons from me.
Right.
At least that's what you were thinking.
That's what I was thinking until he starts opening it up and he goes through it. And he had every single financial transaction for like the last 7-8 years meticulously documented. And I was asking him questions and he's like, well, let me pull that up. And, and he's like giving me the exact amounts. And I'm just like, that's actually very impressive.
That's incredible. That's better than the vast majority of small businesses that I've worked with.
Yeah. I mean,
that blows my mind.
Most people are like the receipts in the shoebox or.
Yeah. Oh my gosh. I can't tell you how many times I'm like, hey, let's look at your financial records. And I get freaking Ziploc bags. I hate Ziploc bags. Ugh.
Oh yeah. Yeah. So people oftentimes are making a mess of their finances.
Yeah.
And when they're making a mess of their finances, then what they're doing is they're hiring, an accountant to kind of clean it up, and they're only doing it around tax time.
Right.
It's like, oh crap, I got to do my taxes, so I better do my finances. And if you're only doing your finances around tax time, there's so much information out of those financial statements that you should be using to manage your company, and you really should be reviewing them a whole lot more often. In fact,
yeah.
I recommend 17 is the number of times
annually.
So, annually 17.
17 times every year.
Yes,
is what I meant.
Oh, okay.
17 every 17 years. Or you're saying 17, and I'm like, do it in Microsoft Word once a year. That sounds awesome.
So you know how we lost that first third? Well, we just lost the second third, and we've got a few people that they're only listening for entertainment value at this point.
No, they just haven't. They're just frustrated with traffic, and they're distracted.
Oh, okay. No, they're relating. They're like, oh, geez, I need to get those out of my Ziploc bags.
They open their glove box and start pulling Ziploc bags.
So 17 times, kind of a weird number, but if you look at it, there are 12 months, there are 4 quarters, and there's 1 year. 12 plus 4 plus 1, 17. So you should be reviewing your financial statements monthly, you should be reviewing your financial statements quarterly, and you should be reviewing your financial statements annually. Now, think about this for a second. When I get to the end of a quarter, I'm actually reviewing my quarterly statements and my monthly statements at the same time because I'm going to see different things with quarterly and monthly statements. So like a quarterly statement is going to show me, a more cyclical approach to my business, whereas a monthly statement is going to show me, literally how well I did that month. Do I have a good month or a bad month? What are my expenses doing? It's a lot more granular. And so, and then annual obviously is going to help you see if you achieved the goals that you set for that year. And so,
right.
There's a lot of information that you can get, and definitely you want to be focusing on both of those.
Absolutely. And so I think that this is a great segue back into what we originally set out to discuss, which is how to clean your room.
How to clean your room.
Just kidding. But, okay, so let's go ahead with the story. And,
Okay.
And if you're not actually going to tell it this time, I mean, first time, shame on me, right?
All right. I'll tell the story. So anyway, when you're doing your financials, a lot of times you want to understand the chart of accounts. And if you're using a software program, you can get into your chart of accounts. If you're doing it old school, chart of accounts is how you originally would set this up, but chart of accounts is nothing more than saying, what are all of the line items that are going into my financial statements, right? But a lot of times people get confused and they're just thinking to themselves, chart of accounts, I'm not familiar with this. I never took accounting in college. I don't really know what's going on.
Yeah.
So I came up with this little story to help businesses make a lot more sense out of this. And that is, and this isn't uncommon information. There are, 5 types of accounts. You've got your revenue accounts, your expense accounts, your asset accounts, your liability accounts, and your equity accounts. And the quick definition of each. So if I'm dealing with revenue accounts, that is, sales. Money that I'm selling products and services, money is coming in, right? Expenses, I'm paying for, goods and services to make sure that I can keep my business operating. Assets, those are tangible things that I own in the business. There is such a thing as intangible assets, but for most small businesses, unless you have intellectual property, you're really not going to be dealing with intangible assets. And so I say it's the tangible things. If you can touch it, if you can hold it in your hand, you can put it in an asset category.
Good luck putting your building in your hand.
You can touch it. That was the first.
Fine. Touche.
So liabilities, just a big fancy word for debt. So if you have any debts, those are going to fall into the liabilities. And then equity is the owner's portion, right?
Right.
So pretty simple, pretty straightforward. Here's the problem. When I work with businesses, they start getting confused as to, they're like, well, is this a liability or is this an expense? How do I know? How do I tell the difference? And so I give this little story to help businesses know what to do. And that is, think about helping a little kid learn to clean their room. All right? So, Ryan, you got a couple kids. What's it usually like when Saturday morning, it's time to get the room cleaned? What does that process look like?
And this is a topic for probably not this podcast, and definitely another time.
We're not going into parenting. No,
No, here's the deal. I don't understand why girls aren't ruling the world. Legitimately, like, why don't we have a female president yet? Why? I don't understand. Because here's the thing. I can be like,
they are, and we just don't know it yet.
So I am that fooled, is what you're saying.
Yeah.
Perfect. Ladies, please keep it that way. Just make sure. I just want to eat occasionally and be happy. I'll do anything, right? So here's the deal.
Okay.
My daughter, she's amazing. And yes, she does have me wrapped around her finger. And a lot of that is because I can be like, hey, Elle, go down and will you just please pick up your room? I go down 20 minutes later, whatever. It's immaculate. It's beautiful. She's great. She can get messy, but she can also take care of her own stuff. And I don't have to hound her most of the time. But when I have to try and strangle my son into doing anything outside of running as fast as he can in any which direction.
Away.
Yeah, to do something, right? I'll be like, hey, go outside and play. Hey, we're going to baseball practice. The dude's just like full of energy, okay? And doesn't want to do anything but run, I swear.
Okay.
And yeah, it's just trying to pin him down and make him do anything, especially clean his room, is insane. It's just insane. Stuff just gets thrown everywhere. He'll shove his clothes under his bed and his toys in his dresser and his blankets from his bed in his toy boxes. And,
And they'll go to more effort to not clean their room than the amount of effort it would have taken to clean it in the first place.
Right.
So here's the analogy. Business owners are the same way.
Right.
You talk to them and you say, okay, we got to do your finances. Okay, whatever,
Right.
And you come back a couple of weeks later and it's like, oh, okay, have you got your financials, organized? Oh, yeah, well, I was supposed to do that, but, and it's just excuse after excuse after excuse. And I can't get business owners to just clean their room. They won't do their financials. Right.
Well, and I think a lot of that is because, for two reasons. I see two main reasons why there's so much, resistance toward that. One, and this is exactly, I think, why kids are so resistant to, or the experience they have, right? One, it's just so daunting, right? It's not a particularly enjoyable task. It's
not hard, but it's unknown. And that's what's daunting about it is you're just like, oh, what if I make a mistake, or I don't want to learn all of this.
It's unfamiliar, right?
Yeah.
And two is kind of along those same lines. It's that it seems super complicated, like you were saying. It's like this crazy difficult thing, and what if I make a mistake? And but then at the end of your kids cleaning their room, like once you finally, holy crap, once I finally get my son to just freaking do it and do it right, it's done in like 30 seconds, I swear. Especially because the kid has so much freaking energy. And it's the same way with our small businesses that I've worked with, and I'm sure a lot of them out there, is that it's really not as difficult. I mean, yes, you can make it incredibly horrible. I mean difficult. I mean horrible. But it can really be super simple and super easy. So when we were talking about reviewing financials 17 times a year, I swear I could feel that second third that left. I just felt them all die inside, right?
It's a big number. You're like, really?
Oh
you
my
want
gosh.
Me?
Yeah. And
but
they're like, no way, I'm not even gonna do it. I don't even want to do it once a year, let alone 17.
But if you think about it, when we say review your financials, it's like take 5 minutes. Yeah. Just look down and see where the trends are going, make sure things look okay, do a little bit of ratio analysis, and,
They just died again inside. You said ratio analysis.
I know.
So, but
it's such a powerful tool.
It is. But that's the other piece of it that I'm talking about with the second part is like, once you understand what it is that you're looking at, and don't get me wrong, it really doesn't take much to get there. Believe me, because I'm there, right? And I'm not the sharpest tool in the box. I didn't get, a master's in finance. I'm just run-of-the-mill entrepreneur, right?
Right.
And these really aren't difficult things. I'm telling you, these are simple things. And once you get them down, cleaning your room or looking at your financials, getting your financials right is super simple, and it's super effective. You'll be so much better off than 95% of small businesses out there if you can just buckle down and do it.
And here's the crazy thing. Just like with cleaning your room, when it's finally clean, how hard is it to keep it clean?
Yeah. Easy.
Easy if you stay on top of it. Same thing with your financials. If you get them clean and then stay on top of them, they're not that bad. But it's when they're a whole mess and you don't know where to put things. And so here's the insight that I came across several years ago when I was trying to explain this to a small business owner. She was sitting in my office, and I'm sitting here talking to her, and she's just feeling this. It's daunting. It's overwhelming, those things that you were talking about. And you could see it on her face where she's just, not at all wanting to do this.
Yeah.
And, I came up with a little analogy of cleaning your room. And what I said is, I'm like, okay, what do you do when your kids don't want to clean their room? She's all, well, what I do is I separate it out into the bins, so like all the clothes go in the clothes hamper. All the books go on the bookshelf. All the toys go in the toys bin. So like everything has its space that it goes. And I'm like, that's it right there. That is how you do your finances, is everything goes into its own bin or its own bucket.
Yep.
And, and she said, well, but what if I get it wrong? And I asked her, I'm like, okay, let's keep going with this, cleaning the room analogy here for a minute. When your kid comes to you and they're holding in their hands an activity book and they're like, I don't know where to put it. Does it go with the games because it's an activity book, or does it go with the books because it's a book? And you being a good parent, what do you say?
I don't care. Just put it away.
Exactly.
Goodness H.
I don't care. And this is where a lot of CPAs argue with me, but I'm going to tell you as a small business owner, it doesn't matter. Just put it away. So if you come across an item and you're like, I don't know, is this an expense or is this a liability? Pick one. It doesn't matter. And here is why. Consistency is more important than accuracy.
Right. And that is the caveat right there. And I'm super glad you brought that up.
Yeah, because if you aren't consistent, this won't work. If you're bouncing back, if sometimes you put it in the game bin and sometimes you put it in on the bookshelf, and you're bouncing back and forth, that will screw up your financials.
Yeah.
But if every single time you always put it on the bookshelf, when you get with your CPA and he looks at it and he's like, this doesn't go here, it will take him 30 seconds to just move that line item and put it under the correct classification because it's already put together. It's already organized correctly.
Exactly. And then going forward in the future, you know where he'll want it.
Yeah.
Right?
Yeah. And you just put it in there. So, consistency is more important than accuracy. If you are consistently wrong, it's easy to fix it.
Yeah.
If you are inconsistent, it doesn't matter if you're right 80% of the time. You have to go through and clean up the whole thing because you don't know where that 20% fell.
Yeah, exactly.
And so it makes this huge mess. And so when you're doing your chart of accounts, when you're trying to understand where things will go, just stay consistent. Make sure that you're always putting them in that one bucket. And there are only 5 buckets you got to worry about. You got the revenue bucket, the expense bucket, the asset bucket, the liability bucket, the equity bucket. That's it. Everything in your business will fit into one of those buckets.
Yeah. And it's that simple. Like, it's not this mind-bending experience that you have to go through in order to keep this clean and organized.
Yeah.
Right?
So
super duper simple.
So don't make it that way.
Right.
Just keep it clean, keep it organized, and you'll do fine. So with that, I think we're going to wrap up for today. We appreciate you guys indulging us a little bit. Let us have some fun. No, I had fun today.
I did too.
I enjoyed it.
Went by quick.
It did. Yeah, we covered a lot of ground, got a lot of things done. If you would like to fire back with your thoughts on this analogy and using it, how you've used it in your business, reach out to us. You can find us on our website, marketingmanagementmoney.com. You can reach out to us at Twitter at MMMSmallBiz. That is BIZ. And we will catch you again next week.